Yeah, I wouldn't read too much into that. So if you look at Tesla, it outperformed a lot of the other EV stocks. And part of that was we had higher volume numbers. So we kind of got what we were expecting coming in. I mean, you got a beat on the auto GM X credits, but it's not a huge beat. And I think the more important thing is going to be what they say and talk about with respect to Texas and Berlin and how that's going to factor in. And so I continue to remain positive on this name, and I think that it'll probably be volatile.
Tesla saying in the release, Laura, that factories have been running below capacity for several quarters as supply chain becomes the main limiting factor, which is likely to continue through 2022. What else stands out to you, and what do you want to know from the call?
The supply chain issues, just the acknowledgement that those will remain challenging in 2022 might be what's putting a slight damper on trading right now. They're also pretty blurry with guidance. They're just saying Cybertruck will follow Model Y in Texas, and it's not more specific yet. Maybe we'll get more on the call. There's a lot of excitement around Cybertruck, this like experimental metal pickup. And one thing that stood out to me, it's maybe not as sexy as all the autonomous vehicle tech and Cybertruck and all that, is just what kind of, how are stores and service centers keeping pace with the demand out there? We see, vehicle deliveries growth is pretty high, very high, but then store and service centers are only increasing, 25% year over year. And superchargers too, especially if they plan to move ahead with ambitions Elon Musk has brought up in the past to open up those superchargers to other electric vehicles around the world. The supercharging network increased, 36% year over year. I saw in the shareholder deck, and I'm wondering how that impacts customers, longer term. They want to all maintain like this exclusive charging access, and they want to have white glove service, but it seems to have been more rocky in recent years.
Jed, what did you make to the reaction to Netflix's quarter and the risk that Tesla could lose its halo as it relates to avoiding gravity when it comes to earnings multiples? Maybe not this quarter, but at some point in the next few quarters.
Well, you're definitely seeing a risk-off trade, which is going to so if you just kind of look at it, numbers are probably low and have to come up across the board with respect to volumes, because you're going to have Texas, Berlin, and those have to be factored in, and not all of the consensus numbers have that in there. We think that energy is probably low and will have to come up. But you're going to see the risk off, which means that some analysts are going to probably take cover from a lower multiple on higher numbers. And so I think you're going to continue to see, volatility in this name and a lot of different opinions. I still come back to the fact that we believe that what's setting up here is less on the auto side and how they use auto and the capacity from the 4680, which you'll see in Texas, to get into the energy storage market and to ramp that, which is basically non-existent in most estimates. But I think that's where you're going to see the narrative start to shift to talk about more of an energy story in 22 and less of the comp as an auto company.